Welcome back to XRP Insider, the channel where we break down the biggest XRP stories, the latest crypto developments, and the market moves that could completely reshape the future of digital finance. Today's update is absolutely massive because the XRP Ledger could finally be preparing to close one of its biggest weaknesses in decentralized finance. And if this new proposal actually gets approved, it could completely transform how liquidity works on XRPL. We are talking about a major automated market maker upgrade that could bring concentrated liquidity, StableSwap functionality, and even programmable Smart AMMs directly onto the XRP Ledger. This is the kind of development that long-term XRP holders have been waiting to hear for a very long time, because one of the biggest criticisms surrounding XRPL has always been its limited DeFi infrastructure compared to networks like Ethereum and Solana. But now, things may finally be changing. And the timing here is extremely important because this is happening while institutional tokenization activity on XRPL continues growing rapidly. So in today's video, we're going to break down exactly what this proposal means, why it matters, how it could impact XRP price action in the future, and why many people inside crypto are starting to pay very close attention to what Ripple and XRPL developers are building behind the scenes. The new proposal is being called AMM Swappable Curves, and at first glance that might sound extremely technical, but the core idea is actually very simple. Right now, the XRP Ledger's automated market maker uses only one liquidity model, known as the constant product model. That system works reasonably well for many crypto assets, but it also has major limitations because it spreads liquidity across every possible price range equally. That may sound fine in theory, but in practice it becomes very inefficient, especially for stablecoins or assets that usually trade close to the same value. What this new amendment would do is give liquidity providers the ability to choose different curve types when creating liquidity pools. And that is a very big deal because it means XRPL could suddenly become much more flexible and much more competitive with the larger DeFi ecosystems that currently dominate the industry. According to the proposal, there would initially be three major curve options available, including constant product pools, concentrated liquidity pools, and StableSwap pools. Then later, developers may introduce something called Smart AMM, which could make the system even more advanced and customizable over time. Now let's talk about concentrated liquidity because this is probably the most important part of the entire proposal. If you've been following decentralized finance for the past few years, then you already know concentrated liquidity became one of the biggest innovations in DeFi after platforms like Uniswap introduced it. Instead of spreading liquidity across every possible price range, liquidity providers can focus their capital inside narrower trading ranges where most transactions actually happen. And the result is dramatically higher capital efficiency. In simpler terms, traders get deeper liquidity with less money sitting idle inside the pools. That creates better trading conditions, lower slippage, and more efficient markets overall. The reason this matters for XRP Ledger is because XRPL has been missing this functionality ever since its AMM system launched back in 2024. Meanwhile, most of the major DeFi ecosystems already moved toward concentrated liquidity as the industry standard. In fact, the proposal itself cites data suggesting around 60% of all AMM trading volume now flows through concentrated liquidity systems. So if XRPL wants to compete seriously in DeFi, this kind of upgrade may no longer be optional. It may actually be necessary for long-term growth. Then we have StableSwap functionality. And this is another critical piece of the puzzle, because stablecoin trading is becoming increasingly important across the digital asset industry. StableSwap models are specifically designed for assets that maintain very similar prices, like dollar-pegged stablecoins or wrapped versions of the same token. Traditional AMM models often waste liquidity when handling these kinds of assets because they are optimized for volatility, not stability. StableSwap changes that by creating much more efficient pricing for near one-to-one assets. That means tighter spreads, better execution, and improved liquidity efficiency. If XRPL wants to become a serious hub for tokenized assets and institutional finance, StableSwap functionality could play a huge role moving forward. Think about the direction the financial world is heading right now. More institutions are experimenting with tokenized treasuries, tokenized bonds, tokenized deposits, and blockchain-based settlements. Those systems need efficient, stable asset trading infrastructure, and that's exactly what this proposal is trying to deliver. So while some people may see this as just another technical amendment, amendment, the reality is that it could become a foundational upgrade for the entire XRP Ledger ecosystem over the next several years. One thing that really stands out about this proposal is how carefully developers are trying to implement the changes without disrupting the existing ecosystem. According to the draft, all current liquidity pools on XRPL would remain untouched. That means there would be no forced migrations and no mandatory changes for existing users. Pools already running on the current constant product model would continue operating normally. Only new pools created after the amendment activates would have access to the expanded menu of curve options. And once a pool selects its curve type during creation, that choice would remain locked permanently for the lifetime of the pool. That design approach is important because it reduces risk and avoids unnecessary disruptions across the network. Crypto markets can react very negatively when protocols force migrations or introduce breaking changes that confuse users. XRPL developers appear to understand that, and they're trying to balance innovation with stability. For institutional participants especially, predictability and reliability matter enormously. So the fact that existing pools would remain unaffected could help build confidence if this proposal eventually moves closer toward activation. Now here's where things get even more interesting. This proposal is arriving at a time when the XRP Ledger has quietly been building serious momentum in tokenized real-world assets. According to recent reports, more than $3 billion worth of tokenized assets already sit on-chain within the XRPL ecosystem. And perhaps the biggest headline came earlier this month when Ripple and J.P.Morgan reportedly participated in a pilot involving a tokenized U.S. Treasury redemption processed in under 5 seconds. That is an incredibly important signal because it shows major institutions are actively testing blockchain infrastructure for real financial operations. But here's the thing many people overlook. Tokenization alone is not enough. Institutions don't just want to move assets onto blockchains. They also want those assets to generate yield, support borrowing, enable efficient trading, and integrate into larger decentralized financial systems. That's where DeFi infrastructure becomes critical. Without strong liquidity systems, tokenized assets lose much of their potential utility. So if XRPL can successfully improve its DeFi architecture while simultaneously growing institutional tokenization activity, that combination could become extremely powerful over time. This is why many XRP supporters believe the market may still be underestimating what Ripple and XRPL developers are building behind the scenes. For years, critics argued that XRP Ledger focused too heavily on payments while falling behind in areas like smart contracts and decentralized finance. Ethereum dominated DeFi. Solana exploded with high-speed trading applications. Avalanche pushed subnets and institutional partnerships. Meanwhile, XRPL often remained associated mainly with cross-border transactions and Ripple's banking narrative. But now we are starting to see a broader strategy emerge. Tokenization, institutional settlement systems, liquidity infrastructure, stablecoin functionality, and potentially programmable AMMs all point toward a much bigger long-term vision. Of course, none of this guarantees immediate price appreciation for XRP itself. Markets are complicated, and narratives alone are not enough to drive sustainable rallies. But from a technological perspective, these developments suggest XRPL may finally be evolving beyond the narrow use cases many people previously associated with it. The proposal itself was authored by XRPL core developers Dennis Angel and Roman Thupt, and it's important to understand that this is still only a draft amendment at the moment. Nothing has been finalized yet. Before activation, the amendment would still require community discussion, technical review, validator support, and ultimately a formal vote through XRPL's amendment process. And if you know anything about how blockchain governance works, then you already understand that these things can take a very long time, sometimes months, sometimes even longer. There is absolutely no guarantee the proposal will pass in its current form. Amendments can be modified, delayed, or rejected entirely, depending on validator consensus and ecosystem feedback. So while the excitement around this proposal is understandable, it's also important to stay realistic. The crypto market has seen many ambitious upgrades proposed over the years that never actually reached production. That said, the fact that XRPL developers are actively working toward these improvements already says a lot about where the ecosystem wants to go in the future. At the same time, XRP price action itself remains relatively cautious. During U.S. morning trading hours on Tuesday, XRP traded around $1.34 while continuing to move within a narrowing range. Traders have been watching closely for breakout confirmation, but so far the market hasn't delivered a decisive move in either direction. And honestly, that's not too surprising given the broader uncertainty across crypto markets right now. Bitcoin has faced renewed volatility, macroeconomic concerns remain elevated, and many altcoins continue struggling to establish strong momentum. But developments like this AMM proposal could gradually strengthen XRP's long-term investment narrative, especially among institutional participants looking for infrastructure plays rather than purely speculative assets. Markets often price in future expectations long before upgrades actually launch. So even though this amendment process may take months, investors will likely continue monitoring every stage very carefully. If momentum builds around XRPL's DeFi capabilities, sentiment surrounding XRP could eventually shift in a much more bullish direction. Another important factor here is competition. The DeFi landscape is incredibly crowded, and XRPL is not entering an empty market. Ethereum still dominates decentralized finance in terms of total value locked and developer activity. Solana has become a major player for high-speed applications and meme coin trading. Other ecosystems like Arbitrum, Base, Avalanche, and Sui are also competing aggressively for liquidity and institutional partnerships. So XRPL doesn't just need functional DeFi tools. It needs compelling advantages that make developers and liquidity providers actually want to build there. Lower costs, faster settlement times, and institutional relationships could become part of that strategy. But the technology also needs to support sophisticated liquidity management, which is exactly what this proposal aims to address. Without concentrated liquidity and advanced AMM functionality, XRPL risked remaining behind the curve while the rest of DeFi continued evolving rapidly. So from a competitive standpoint, this amendment could represent a very necessary step if XRPL wants to remain relevant in the broader blockchain economy. What also makes this story fascinating is how closely it aligns with the growing institutionalization of crypto markets overall. Over the past few years, the industry has gradually shifted from purely retail speculation toward larger financial infrastructure development. We are seeing tokenized treasuries, stablecoin payment systems, real-world asset protocols, and even AI integrations starting to enter the space. In fact, Coinbase's Base network recently launched a new AI tool, allowing users to connect crypto wallets directly with AI assistants like ChatGPT and Claude. That tells you exactly where the market is heading. Crypto is no longer just about buying coins and waiting for price pumps. The industry is evolving into programmable financial infrastructure connected with artificial intelligence, tokenized assets, and decentralized applications. XRPL clearly wants to participate in that next phase of growth, and if its DeFi systems become more sophisticated, it could potentially attract a much wider range of institutional and developer activity than many people currently expect. There's also a psychological component to this story that matters for XRP investors. For a long time, many holders felt frustrated watching other ecosystems dominate the DeFi conversation, while XRP remained largely absent from those narratives. Even during periods when Ripple secured major partnerships or legal victories, critics still argued that XRPL lacked the developer ecosystem necessary for modern decentralized finance. But proposals like this begin changing that perception. Whether the market immediately reacts or not, they demonstrate active ecosystem evolution. And perception matters enormously in crypto. Investors want to believe a network has a future. Developers want to build where innovation is happening. Institutions want to deploy capital into ecosystems showing long-term adaptability. So even the discussion around these upgrades may gradually reshape how the broader market views XRPL over time. Of course, there are still legitimate questions that need answers before anyone starts celebrating too early. How quickly could developers actually adopt these new liquidity systems if the amendment passes? Would enough users provide liquidity to create healthy markets? Could XRPL attract major DeFi protocols away from competing ecosystems? And perhaps most importantly, how would regulators view increasingly advanced DeFi functionality tied to networks associated with institutional finance? These are not small issues. The crypto industry remains heavily influenced by regulatory uncertainty, especially in the United States. Any ecosystem seeking institutional adoption must balance innovation with compliance concerns. Ripple itself has spent years navigating legal battles and regulatory scrutiny, So as XRPL expands deeper into decentralized finance, the network will likely face even more attention from regulators and financial institutions alike. Still, when you zoom out and look at the broader picture, this proposal represents something much bigger than just another technical upgrade. It reflects the maturation of the XRP Ledger ecosystem itself. Early blockchain networks often focused on solving one core problem. Bitcoin focused on decentralized money. Ethereum focused on programmable smart contracts. XRPL initially focused heavily on payments and settlement efficiency. But over time, ecosystems evolve because financial markets demand more functionality. They demand liquidity systems, lending systems, tokenization, stable assets, and sophisticated trading infrastructure. XRPL now appears to be entering that next evolutionary phase. And while the road ahead may take time, the direction itself could become increasingly important for XRP's long-term relevance within the crypto industry. Many traders are already wondering whether these developments could eventually influence XRP price targets in future market cycles. And while nobody can predict exact prices, one thing is very clear. Stronger utility narratives tend to matter enormously during bullish crypto environments. In previous cycles, projects associated with major technological innovation often attracted significant capital inflows. Ethereum benefited from the DeFi boom. Solana benefited from high-speed application growth. Avalanche benefited from subnet narratives. If XRPL successfully combines institutional tokenization with advanced DeFi infrastructure, that dual narrative could become extremely attractive during the next major expansion phase of the crypto market. Again, none of this guarantees immediate gains, but markets are heavily driven by future expectations and ecosystem momentum. At the same time, XRP holders should probably remain patient because blockchain governance moves slowly, especially when institutional-grade infrastructure is involved. Developers need time to test systems thoroughly. Validators need time to review security implications. Community debates can stretch for weeks or months. And in crypto, timelines almost always move slower than people expect. But despite that reality, this proposal still feels important because it signals clear intent. XRPL developers are not standing still. They are actively trying to modernize the ecosystem and position it for the future financial landscape that appears to be emerging right now. And honestly, that may be the biggest takeaway from this entire story. Whether this amendment passes tomorrow, 6 months from now, or never at all, the conversation itself reveals where the XRP Ledger ecosystem wants to go next. It wants deeper liquidity. It wants more efficient markets. It wants institutional-grade DeFi infrastructure. It wants to compete in tokenized finance. And it wants to evolve beyond the limitations that critics have pointed out for years. The crypto industry changes extremely fast, and ecosystems that fail to adapt often disappear from relevance surprisingly quickly. XRPL seems determined not to let that happen. So now the big question becomes whether the community, validators, developers, and institutions will ultimately rally behind this vision strongly enough to bring it fully to life. That's all for today's massive XRP update. If you enjoyed this breakdown and want more daily XRP news, Ripple updates, crypto market analysis, and institutional adoption coverage, make sure you stay locked in right here on XRP Insider, because the next few months could become incredibly important for the future of XRP and the entire XRP Ledger ecosystem.